Good evening, ladies and gentlemen. It is Tuesday, the 18th of May, 2021. Welcome to Hindsight, episode 8, where we learn to be a better trader. We're going to take a look at everything in hindsight, see what could have been done better. And we're going to focus on today, yesterday, and Friday last week. So we're going to start with Friday. MDX, there's a lot of background here, and there's a lot to learn from this stock. Now, first things first, where to begin? The top 20 holders are pretty much all Chinese. Now, take that for what you will, because historically pre-COVID, anything to do with China was bad. This is before the trade war, right? China was historically unreliable, or Chinese investors were historically unreliable when it came to things like LOIs, letter of intents, or even binding MOUs. It's not worth the paper they're written on, or at least they didn't used to be. And now all of a sudden we've got, a top 20 board consisting of pretty much entirely Chinese members. That sort of raised a lot of eyebrows on the ASX, on FinTwit. That was a bit unusual. Make that what of that you will. I personally have no real opinion because I haven't seen that before. It's just China's got a really, really bad reputation even before the trade wars. So that was something to keep an eye on. Public chat pointed this out at around 3 cents, right? This was already up 1,000%. So at this point in time, I was looking at it. The bids were 3.7. The ask was 4.5. There was like an 7 or 8 tick spread. It was terrible. I made a poll on Twitter as a bit of a joke about MDX's spread. And from here, it still ended up launching. Now, here's the lesson that I've been sort of learning, or rather something that I've noticed on the markets, but I still haven't actually learned the lesson. And that is anything with a spread that's rallying is almost always worth buying, right? Let me just preface this by saying I'm not a financial advisor, and this should not be taken as financial advice. I'm not recommending you to buy, sell, or do anything with any particular stock that I'm talking about. But the lesson that I've learned, or I am in the process of learning, is highly liquid stocks. All right, let me just zoom out here. This is the daily chart. Super, super fucking liquid. 2-year suspension. No liquidity at all. This is prime pump material. This is what they all look like in the last 6 months, right? My fucking boomer pre-2019, pre-COVID trading brain is stuck in the past. And that is not to touch this kind of garbage, right? 1.9 billion shares on issue. If you check the new prospectus, your trading platform might tell you it's got 935 million shares on issue. That's incorrect. Add an extra billion on top. All the more reason not to touch it, and yet it still rallies. And it has a super thin book. Why? Because where's the liquidity? Who's selling after 2 years of suspension? Where's the sell volume coming from? There's not much. There was nothing. Hence, really thin book. There was something like $30 million worth of cash coming through MDX from the announcement. So it was about 3 million market cap at 003, roughly, something like that, maybe 6 mil. So there was an opportunity to take it to 3 cents, but even after 3 cents, it didn't make sense, right? There was 7 tick spread. Everything was telling me this is bad. A board members made up T20 of Chinese investors, right? Red flag number 1. Second red flag, the spread of 7 ticks. Third red flag, 1.9 billion shares on issue. Fourth red flag, it's been 2 years in suspension, right? Red flag after red flag after red flag, yet this garbage keeps rising. So I joked in Discord, I was like, you know what, every time I see a stock that looks exactly like this, super illiquid on the daily chart, super illiquid, super fucking illiquid, and there's nothing on the book, every single time jump the spread, right? It's easier said than done, because you're going to be at a 20% loss instantly. The second you buy it, there is nothing to hit out on, and yet it keeps going. So I think the lesson learned in hindsight is just to not put in size, but maybe just $1,000, right? Just $1,000, and just see what happens. And then if it just keeps rallying, just another $1,000, scale in another, maybe even 500. So I did end up taking this when it did break 10 cents. All right, it took me all the way to 10 cents to really see the liquidity. So, once it hits this level here, there's a certain sort of parabolic move that comes out of a setup like this. This is a pretty sharp angle. And when it breaks out, it rallies, right? This happens time and time again. It's happened on ZipPay. It's happened, I think it was on ATH. Yeah, there's a bunch of stocks that rally and pump this hard. Now, the obscure thing is that because it went from sub 1 cent to 10 cents, 10 cents is usually the rejection level, like 99 times out of 100. What do we have here? It consolidates, for fuck's sake, above 9.4 cents. Now, 9.2 is my magic number. Usually when something goes from, let's say, 7 cents to 10 cents, the pullback is 9.2 for me. That's like the magic pullback number if this is going to go for another run. Ends up going to 9.3 and holding, and then breaking to the upside through 10 cents. I just didn't even know what I was looking at when that was happening. Scalped it for a tick or two, just tick, 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 tick. I probably took about 6 entries on this thing. Nothing, didn't make anything spectacular on it, like nothing to really worth talking about, because this is what I was afraid of, right? That was coming. And I think it was more and more obvious as this was happening. I believe, if I recall from memory, there was a reload seller at 23. And this was the dream trade. And let me just zoom out and show you guys. This is my favorite setup, and I haven't taken it for maybe several months. It's very, very, very difficult to come across this setup, but it's one of my favorites. It is from previous closing price of the previous day, or previous trading day, to the high, is a falling knife. Something that just goes blut straight to 61.8. That's the entry. Anything at 61.8 or sometimes below, because that can be a bit of a high volume panic sell. So anything from 9.2 to 7.6. I know it's a bit of a broad range, but it works every single time I've done it. Again, not financial advice. This is just shit that I do. And that's when it comes really quickly. I'm talking straight through VWAP. If I bring up the VWAP bands, straight through. And you can even see VWAP ain't respected. Where's a sharp bounce? Nothing. It grinds for like 4 minutes and then comes through VWAP. It's such a dog shit stock. So, you know, that's what you get after trading for 9,000%. Don't even expect VWAP bounce. That's garbage. The only trade there is, and I maintain this every time there's a stock that goes above, 150% and it's a dog stock, is if there's ever a falling knife, the only trade I have left is 61.8 on a sharp sell-off. I'm talking sharp, like it needs to get there in this chart within 12 minutes. That's how sharp that sell-off needs to happen in order to trade it. And it happens every time. Every time, sharp sell-off 61.8, maybe a little bit below, it comes to the 38.2 and it touches it. So usually a tick below 38.2. That's the trade there. Otherwise, it's just garbage. It just trickles off, trickles. Now, I'm going to show you a recording of Spark for MDX and something I consider sort of a new age manipulation of the order book. This is some fancy shit. Right, we're going to look at 2:37 p.m., which on the charts here is right around here. So that's 2:36, 2:37. We're going to take a look at this subtle move here around this range. I'm going to show you what happens on the order book and something that never really used to happen pre-COVID. So here's the order book at 2:37. We're going to see fake orders stacked at 8.4. Now we have 1 million stacked at 8.4. We've got 500,000 stacked at 8.5. We're going to have 2.5 mil. I think it's 2.5 mil at 8.6. And there it is, 2.5 mil. Now watch what happens. 8.7. Someone steps in front of that wall and gets sold into straight away. 8.7 again, sold into straight away. Let's take a little bit longer look. 8.8 gets taken. 8.7 queued up. Pull. Every single fucking line just got pulled. That is a single individual bot right there. And all that happened in order to bail out at 8.7 and probably take out about $40,000 worth off a holding, risking 1 mil shares, risking 0.5 mil on top and 2.5 mil, and I think it was another 500k on top. Let's have a look. About 500, maybe 600k. And just to sell maybe 300,000 shares. So here's the scary thing about why this kind of stock manipulation is particularly new, or the meta. Firstly, because the order book on the bids, the bot is the first in queue. That's the scary part. Never have we really seen pre-COVID a bot that was sit first in queue. It just never happened. There was always some shares there. Let's say at 8.2, for example, because we can see it here. Let's go back a little bit more. Okay, here at 8.4, we've got 55,000 shares. A bot might sit 2 million shares behind the 55,000. It could be at 8.4, could be at 8.3, it doesn't matter. But it was never first in queue to get hit. And that's how you really knew it was a bot, because it was sitting behind other orders, and the second this order would get touched, that 2 million, 2.5 million, whatever the fake order was, the spoof would get pulled. That's your traditional pre-COVID, pre-2019 bot would look like, at least in the micro cap space. And now what we have, and it's a scary thing, that's a scary thing there. There's a bot comes in, 1 mil. And you might be thinking that's on top. It's not on top. The 8.4 order got taken, and this got reloaded. 1 mil, 0.5 mil on top. So this looks like legitimate orders coming through. That's the scary part. Now, if you're a holder, let's say for an example, you're holding MDX here. Let's say you bought in at 9 cents and you got maybe 200,000 shares. You see this action, 8.4, 8.5, and now 8.6. What's your immediate reaction? It's, I'm not going to sell into that. Look how strong that is. Look at that. Look at that. Look how strong that is. If you've got shares and you want to sell, you're not going to sell into that, right? You're just not. And that's what I think is the clever thing. Whether this is AI driven, whether it's machine learning, or whether it's an algorithm being controlled by someone, it doesn't really matter. I just think it's really fucking clever. I think it's really fucking clever to risk that much to make the order book look so legitimate, and then just to pull it all under the rug and watch what happens to the price once all that gets pulled. 8.1 and 8.2, that's what's left. Literally 10%. Okay, there's a little bit at 8.4, but now there's 10% straight off the bat. 10% of liquidity gone. I think it's brilliant, and also really fucking scary. So that's MDX, a new age of sort of stock manipulation or order book manipulation. You can't convince me it's not manipulation at all. That is absolutely designed to bail out at the best possible price and then pull the fake orders. And I think it's brilliant. Brilliant and scary. NXL, let's take a look at the daily chart here. We have a nice little setup. This is going to be an overnight hold, bullish engulfing candle. It hit the top here. Well, it's looking like a horizontal. Let me just bring up the 1 hour chart. This is just a beautiful, beautiful looking swing. Now, I'm not going to hold this for like a week or a month or a year or anything like that. Really, I'm going to close it out tomorrow, 100%. This is not a trade I want to hold for too long. You can see it hit this horizontal here and it closed at its high. It's just a beautiful, beautiful setup. Let me just bring up maybe the 15-minute chart. That looks a little bit better. It's just a nice little flag right at the top, closing at the highs. It's beautiful. It looks strong. High volume hold, high volume push into just a whatever volume and a high volume close. Everything about this is just beautiful for tomorrow. I don't care what happens tomorrow. It could sell off tomorrow. I don't care. This still looks beautiful. So the plan, the target really is somewhere around 390, below 390. I'm not going to get greedy with it. I'm going to see how high I can take it to, but 390 really is just a safe sort of level to take it to. So that's the plan for that one. AMN, if I learned anything from AMN today, losing a couple of ticks from the match, is that nobody fucking cares about potash. Never again will I touch potash. Lesson learned. It's only a couple of ticks. I really put on small size because I don't like match trading lately. Match trading is dog shit as of the last 6 weeks. If you're still match trading, then that's your own fault. You haven't learnt your fucking lesson, it seems. A2 Milk. This one is brilliant. A beautiful intraday trader. Let me show you on the daily chart. And this is going to exemplify exactly why I don't hold NXL overnight or beyond overnight. This downwards channel. This little downwards channel. Breaking below that is disgustingly bearish. Like, it is extremely bearish. People might be bottom picking this kind of range. I think they're fucking brain dead if they're trying to bottom pick. Same situation with NXL. If I bring up the daily chart, we have the exact same thing. It's not quite a downwards channel. It's more like a descending triangle. But the point still remains the same. It breaks down, and then we have a nice, strong, high volume bounce. It's good for a day. Look, I'm not going to try and hope that it comes back and breaks above. That's not interested in this bottom picking garbage. So A2M, On the daily, looks absolutely terrifying for anyone holding a long position. There's just no stopping it. It's a beautiful intraday short all the time. So let me just show you the setup on the 3-minute chart. The play really is waiting for the horizontal of the opening half hour or so, waiting for the break. So here we have a break, right? So here's 10 a.m. Bit of a setup for 30 minutes, 40 minutes. It breaks below the horizontal. There's the short entry. Add on anytime it comes to VWAP. That's it. Welcome to A2 Milk for the last week. Brain dead. Close it into close, always. And then here we've got, you know, it does end up breaking this horizontal at like 12:30 or 1 o'clock, but guess what? It's 1 o'clock. I'm not going to touch that. More than half the day's gone, so there's no trade there. It's got to be within the opening minutes of the day. So let me show you this one on the 1-minute chart. It's probably going to be a bit more obvious. This one, a couple of us traded it today. There's a horizontal here, waiting for that high, that clear break of the opening action. And that's what the first 15 minutes of the day. I didn't end up taking this. I did miss out on this. However, I did get the retest. So what we have here is a dump. Here's VWAP, the white dots. I was waiting for the action at VWAP. It broke above, hit the horizontal. There was a couple of guys in Discord nervous about this one breaking above VWAP. Guess what? This shit ain't breaking above VWAP and fucking holding. You know what's going to happen? It's going to trickle along on low volumes as it gets up to VWAP, and then it's going to get smacked the fuck down on higher volumes, right? Classic stuff on a bearish stock, right? Shorted it at 521. I was happy with that because that's confirmation for me. Like coming back below VWAP, I'm really happy with that. And then of course there was a retest. I was off the screens. My take profit was, my closing position, my stop loss was above my entry by 1 tick. I did not want to get stopped out by VWAP, but if I was at my screens, I'd be adding at VWAP again. All right, every day of the week, bearish stock, add at VWAP short. Yeah, look, 521 and now 520, that would be a 1 tick gain. That's fine. Short VWAP every day of the week is kind of the method. And I didn't close out into close. The plan is, because we're already at $5.12, the plan is $5.02. So we have, I'll just bring this up. Here's $5. Might be thinking, why not queue up at 501? Nah, there's going to be quite a bit of liquidity here at 501. I want to queue up at 502. A lot easier, especially if you look at the order book, a lot easier to get out at 502 than it is 501, and especially $5. The plan, there's a couple of things that can happen. Firstly, $5 is a major round number. 5, 10, 15, 20, 25. Major round numbers. Bigger than $6, bigger than 7, bigger than 13. So my expectation, I have 2 expectations, and either one of these will be true. One is it gets down as close to $5 as possible without touching the $5 wall. And it's going to bounce a little bit. I don't care. 20 cents, 30 cents, 40 cents, maybe 10 cents. It doesn't matter. It might test again. And the first time it breaks $5, there's going to be a long at $4.96. Mark my fucking words on this one. Whether I'm wrong, whether I'm right, doesn't matter. $4.96 is going to be my long. There's going to be stop losses that get triggered the moment it hits $5. Below $5, bang, shoots down. High volume sell off into $4.95, $4.96. That's going to be a long bounce. Why? Let's take a look at the daily. Do you know how many people are going to be buying this on value at $5? I suspect a lot. Right, if we look at, it was $7.50, it's going to be $5, huge discount at $4.96. In my opinion, I'm expecting a bounce. That's my trade. I'm going to close out at 502, then I'm going to take a long position at 496 as a scalp. If it starts collapsing to like $4.90, $4.89, yeah, I'm fucking out of there, of course. Of course I'm out of there. It's a garbage stock. ZAG. This one's also interesting. This has kind of made me question my understanding of microcap gold stocks. Let's take a look at the daily chart. It looks illiquid. I guess that should have been my first sign that idiots will pile in. The book was looking pretty thin. So if I bring up the 1 minute chart, I can show you guys it looked pretty good at around 4.2, 4.3. My target was 4.9 to 5 cents, right? Unfortunately, in the opening, I guess 2 minutes before it opened, it gapped up to 5 cents. There was a spread on the sell side. There was 5 cents. On the bid, there was 4.7. It's fucking terrible. As a match trade, that's a shit trade to make every day of the week. If you know anything about the order book, that's a terrible, terrible trade. But this is a micro cap trash stock, and let's have a look at the announcement. Spectacular results at Paradigm East, including 1 meter at 66. Right. Unfortunately, there's going to be idiots that look at 66 grams a ton and don't know what they're looking at. It's 1 meter. It's smeared. 4 meters at 17.5 grams a ton from 75 meters. Yeah, it's shallow. Yeah, it's great. Okay intercept. Good grades. 1 meter at 66. Guess what? That's a smear. It's tragic because the end result was correct. 4.9 would have been the top end target. If it gapped up to 4.3, 4.9, it would have hit 4.95 and probably trickled off. But instead, we had a big gap up. Idiots piled in. Somehow, on some fucking planet, this managed to hit 6.7 cents. Don't fucking ask me how. I don't know where this money's coming in. I thought these idiots were touching crypto. And they jump in on a fucking announcement that says spectacular. I have a feeling that this move was more to do with this announcement, spectacular results. I'm trying to find some sort of correlation, association with the way these announcements are worded. You know, people don't care about bonanza anymore, but spectacular seems to be kind of a bit of a hype sounding thing, you know, especially when you look at the order book replay for this one. 5 cents got wiped, like, you know, got wiped, and then it got stacked on the bid, and 4.7 was the next bid. Right? There's a fucking 3-tick spread. 350,000 shares got wiped, and then next bid was 4.7, and still people crossed the spread and hit the ask. The fuck was I watching? This isn't normal. You know, these kind of degenerate plays, they usually don't happen. If they do, it usually happens because it opens somewhere like 4.3, it hits the target, and then FOMO kicks in, and then it comes back to the sort of norm and trickles off. But to gap up this hard and rally well above the price target, and I consider myself pretty reasonably accurate when estimating gold targets, like price targets for gold, I should say. So, you know, I think I was right in the end, but how it got there was just completely wrong. And I'm not sure how to really explain this one. Looking at the order book was garbage. And really, I think it really just comes down to the way the announcement was worded. For a 15 mil market cap company, I was willing to give this up to 20. And the price action, I can't explain it. You know, looking at hindsight, I can't see a trade here from the order book perspective, from a news announcement perspective. So that's pretty much it for me in hindsight. Hopefully you get some lessons learned out of the shit that I've traded and the things that are coming out of my mouth. If you do, please hit that sub button. I'd appreciate that very much. Have a good night, guys.